And we are live. Good evening, everyone. Tonight, we will be discussing how Robinhood, Webull, and a few other brokerages colluded to manipulate the prices of GameStop, AMC, BlackBerry, Nokia, and a few other stocks lower, where institutional investors, they had an extremely high short interest in these stocks. And for the past week, they've been getting a short squeeze. So essentially what happened was, by them restricting the WallStreetBets crowd from buying these stocks and forcing you to have to sell the stocks lower, they essentially was able to push the share prices down. Now, from doing some research, what I was able to discover is that the short interests in these stocks is still above 100%. So based upon what I've researched and figured out so far is that, and again, I want to say allegedly here, what they effectively were able to do was that they were able to double up their shorts at about $400. And then because you only could sell the shares, force the shares lower. And then now many of them were able to maneuver the book and buy the stock back up. And that's why you're starting to see the stock now trade up above $300 in the after hours. They literally changed the rules to the game mid-game. Like, imagine you're playing basketball or you're playing football and you have 5 players on the court and they remove 2 of your players in the middle of the game. That's effectively what they were able to do here. And, you have people within the financial media or the quote unquote finance influencers on YouTube and Instagram, and they're out here talking about how, oh, I knew the stock was going to go down. I told you this was going to happen, as if they knew that this was going to happen. This is new territory right here. We haven't witnessed anything like this before, where you have hedge funds getting bailed out by other hedge funds. Now we're finding out that Citadel has ownership in Robinhood, that they sell the actual order flow to Citadel, that exchanges and brokerages can just simply say that you can't buy, you only could sell. This is new territory. And we're not sitting up here. The context of the conversation isn't about whether or not if the stock's going to go back down to $20 or $9. The context of the conversation is why. Why is the stock price in GameStop crashing? Why are the stock prices crashing in AMC, in BlackBerry, and Nokia? It's not because of market dynamics or market mechanics. It's because they're basically saying to you, you can't buy, you only can sell. They're artificially forcing you to have to push the price down. See, it's okay when the big boys liquidate you. It's okay when they can utilize high frequency trading and jump the queue. It's okay when they can mark up the price and force you to pay a higher spread. That's okay. But God forbid you go out here and do some fundamental analysis and figure out that they're short 140% of the actual float. Oh, if you do that, that's a problem. You can't get away with that. It's disgusting when you think about this. And what we're witnessing here, and I keep saying this and I'm going to keep hammering this, is you're witnessing centralization fail. You're witnessing why centralization is so problematic, and you cannot ignore it anymore. The key to beating the globalists, to beating the elite, will be decentralization. I've been on this channel now for years telling you the future will either be decentralized or it will be centralized. This is centralization. This is not what you want. And there's so many other factors and forces overlapping this, because what people are starting to see is that so many aspects of their lives they don't have control over. And there's so much corruption in this system, so much fraud in this system. Whether it's politicians not being able to negotiate properly and give you a stimulus check, whether it's how much the stimulus check will be, whether it's wealth inequality, whether it's the Fed devaluing and debasing your dollar and your purchasing power, or them taking billions of dollars and sending it overseas to other countries rather than giving it to the American people, whether it's voting fraud. There's so many factors at play where Americans are getting tired of what's going on, and people are choosing to fight back. So this is bigger than WallStreetBets. This is bigger than GameStop. This is bigger than AMC. People are basically saying that they're tired of what's going on. So for these finance influencers to somehow make it as if they're a genius because they bought puts in GameStop, it was never about the price of GameStop. It was about sticking it to the man. That was the whole point of this. It never had anything to do with, whether or not the share price was going to go down or whether or not GameStop was going to go to $1,000. The people who were forcing this short squeeze wanted to finally be able to stick it to the man. And that's the context of this conversation. Now, crypto is the solution. And this is why I tell so many of you that are following me that's been engaged in this technology, naturally, people are going to have to come over to crypto. They're going to have to come over to technology that is permissionless, that is borderless, that is censorship resistant, that is immutable. They will naturally come. And we see Coinbase starting the trend now. And understand, I'm not a fan of Coinbase, but I understand that that's the first way of onboarding people. And then the next thing that we're going to cover tonight too is how does Robinhood make their money? Because they're offering you free trades, but in reality, those trades are not free because they sell your order flow to the big institutional investors who front run you, or to market makers who mark up the spread and basically make you pay higher premiums in order to get into these actual stocks. Right? So when we understand this, we understand that there are so many different problems with this system. So it's a lot to cover here, a lot to unpack here. This is probably going to be like a 2 or 3 hour live stream because it's just so much happening right now. And it's all pointing towards the Great Reset. I keep talking to you time and time again about we are going through the fourth industrial revolution, and it's going to force polarization. You no longer can just sit in the middle because so many things are coming to head at one time. As I said before, whether it's wealth inequality, the student loan crisis, the national debt, the deficits. So much is happening right now. Stimulus, unemployment, people being told that they have to wear a mask, shutting down businesses, picking and choosing, literally the government and politicians and the financial elite, they're picking winners and losers, and people are getting tired of it. People are trying to push back. So this is just a blatant in-your-face FU that Robinhood did to you today. And for those of you who went out and purchased puts, you're probably going to get your face ripped off tomorrow because the stock is up over 60% in the after hours. So just keep that in mind. So please do me a favor and like this video, share this video, subscribe, hit the notification bell. Make sure that you set it to all. Make sure that you join my mailing list in the description below so that you can be notified via email whenever I'm going live in case YouTube does not send you the notification. Also, please follow me on Instagram. And if you want to converse with me, shoot me a DM so that we can begin to dialogue. Also, if you're new to crypto and you're looking for a safe place to get involved and learn about the technology, I created My Tech Academy. We have a free 7-day trial. You are welcome to come and test it out to see if you like it. We also have a lifetime membership. We cover everything about the technology, how to buy it, how to store it, how to use it, what underpins it. And we even focus on learning how you can go out and build and develop your own crypto system. So please take me up on the offer and see if you actually like it. And I see some donations coming through. If you can see and hear me clearly, type 1 and we'll get started in a second. Waypos73 says brokers and market makers Citadel failed in a primary reason to exist, to provide a market and liquidity. Brokers halted to tank to cover shorts. Absolutely. As I said before, the short interest is still extremely high inside of the stock. And Zero Hedge put this up. You still have 123% of the float short, meaning that they're short more than the actual outstanding shares. Think about that for a second. So when on Wednesday and Thursday, when they were saying that they covered their shorts, they didn't. Effectively, what they did is they doubled up their shorts at 400, halted the trading where you can no longer buy anymore, restricted it, and then now forced it where only way you can get out of the stock is to sell it. That's it. That's the only way. That's the only thing you can do. You can't buy more to push it up more to squeeze the shorts. The only thing you can do is sell and get out, and you have to sell it at a lower price. So therefore, that's going to put more pressure down. And then they were able to maneuver their book and start bidding up the stock now after they pushed it down to $170, $180. That is the literally in your face corruption and fraud. Like literally in your face. They literally changed the rules of the game mid-game. As I said before, you have 5 players on the court and they just literally said, you know what? We're going to take 2 of them off the court. That's effectively what ended up happening. Thank you for the donation. JB says the WallStreetBets crowd switched over to Dogecoin and it went up 6x in 24 hours. And then Robinhood started glitching for people trying to buy Doge. Shaking my head. This is why you need decentralization. No one owns Uniswap. No one controls Uniswap. It is up 24 hours a day, 7 days a week, 365 days out the year. It doesn't take any holidays off. This is why we need decentralization. Because even think about this, when you're buying Bitcoin and any other cryptocurrency on Robinhood, you're not buying the actual asset. You're buying a contract for delivery or a CFD that mirrors the actual underlying price of Dogecoin. You're not actually buying Dogecoin. See, I can take custody of my crypto. I own my assets. I don't have to trust any third party. The whole idea of crypto is getting rid of middlemen, is getting rid of custodians, being able to interact in a peer-to-peer way, not interacting in a peer to a broker, to a clearing firm, market maker, and all of that. No, you get rid of that. That's the whole purpose of crypto. So, definitely make sure that if you're buying crypto on there, you sell it and buy your own crypto and store it, is my personal opinion. Again, not financial advice, for educational purposes. Alexander Wilson says the CEO of Webull said their stock clearing firm would not process the trades because they didn't have the money to cover all of the trades. He said that forced them to stop trades on the stock. BS. Straight up BS. And I'm going to cover that today. It's a lie. They knew what they were doing. They got pressure from the higher ups to halt trading and restrict buying. That's what they did. That's exactly what happened. And they went and they doubled up their short bets, because we can see as of 1/28/2021, they're still short. The short interest is still over 123% in GameStop. So clearly they didn't cover their shorts. Clearly this is market manipulation. So we have a lot to get into, a lot to cover tonight. And thank you for the donation, Alexander Wilson. The crypto guy. Does Robinhood equal Mt. Gox? Not necessarily, because they didn't just run off with your money and lie to you. I mean, they just basically, it's in the documentation that they can do this to you. This is why I don't recommend trading on apps like Robinhood and Webull, in my personal opinion. So let's get to what's going on real quick. Let's read this article. It says Robinhood, other brokerages restrict trading on GameStop AMC. So popular online brokerages restricted trading in high-flying stocks, including GameStop Corp and AMC Entertainment Holdings Inc., sapping some of the euphoria around shares of companies that individual investors have since skyrocketing in recent days. The restrictions from brokerages, including Robinhood Markets Inc., Webull Financial LLC, Trade Financial Corp, and Interactive Brokers Group Inc., left traders hoping to capitalize on this week's eye-popping gains with only 2 options: hold or sell. They also fueled a firestorm of criticism among users and even some members of Congress who have called for hearings on this matter. The rally in the shares fizzled Thursday. GameStop dropped 44% and AMC lost 57%. Other popular stocks among individual investors, including BlackBerry, Bed Bath & Beyond, and headphone maker Koss Corp, lost 28% or more. All 5 are still up 89% or more year to date. Thursday losses came amid an otherwise upbeat day for markets, with the S&P rising 1%. So think about it. Most people who've been pumping this stock are still up in the money. They're still up. And then after hours, I just want to be clear here, it's trading at $311. Thank you for the donation, Rock. The stock is trading at $311 after hours. And I promise you, all of your quote unquote finance gurus who were bragging about the put options that they were able to put on GameStop and on AMC, they're going to get their faces ripped off in the morning. This thing is going to pop in the morning. It's going to pop in the morning. Now, again, this isn't financial advice. I'm speculating here for educational purposes. I am not recommending that you go out and buy the stock, and I am not recommending that you hold the stock. I said yesterday, and I want to make it very clear and preference my statements, that if you're in the money, you should be taking profit. Because at the end of the day, this isn't about fundamentals. It was mainly driven by trying to stick it to the man. And you can't go broke by taking profit. I clearly said that yesterday, right? You should be moving your stops up. What you should not be doing is piling into this, because at this point, this stock can go anywhere. It literally can go anywhere. But I just want to be clear with you that this thing is pumping, right? Robinhood will allow limited buying of restricted securities Friday. GameStop surges 60% after hours. So they're going to let you buy it tomorrow, limited buying. And it's going to pump. But effectively what they did was they allowed the shorts to get short, push the stock down by you having to sell, and then let them buy back in. And that's why you see it surging right now. Right? So make sure that you keep this in mind tomorrow. Me personally, as I said before, I would not be speculating in this if I wasn't in it already. If you're in it from lower prices, you should be moving up stops. You should be taking profit if you're in the profit. When I say taking profit, meaning selling a percentage. You can sell half, keep half, move your stops up. But at this point, don't go running and piling into this, because you do not know where this can go. You just don't know. But again, a lot of the people who went short, ask them tomorrow morning when they to show you what the put positions are doing tomorrow. Ask them to do that. So it's important that you understand this. And again, they're still short the float, so keep that in mind. Now, I want to play a video real quick for you with the Winklevoss twins talking to CNBC, because I just want you to listen to the line of questioning and how strong the CNBC reporters are with the Winklevoss twins. But when the actual Robinhood CEO comes on, they give him softball questions. So let's listen to this real quick, because I think this is important.
Just one stock or two stocks, they're mistaken. Look, I think this is the beginning of the end of centralized finance. I think if anyone thinks this is about just one stock or two stocks, they're mistaken. I think this is a much larger movement. I think it's a systemic issue, and I think that people need to fix it, or it's going to get much, much worse. I think this is a much larger issue in the thread of our country and its fragility and what's happening in the inequality. And frankly, the hypocrisy of the political leaders who say, you can't open your business and run your business and make a living during the pandemic. We won't pass a stimulus bill in time. And, oh, by the way, now you can't trade. What's the next thing they're going to control and say you can't do? And what it really does... Wait
a minute. Who is saying all of those things? That sounds like some attempt at whipping up something populist that's not based in fact. Is there one person who is saying all of those things?
Have you tried out dining in Manhattan in January, outdoor dining? I mean, that's
yeah, but what politician is telling people they can't trade?
Well, there's a limited number of governors.
Tyler, what politician is telling people they can't trade? If you've got private companies that are shutting down trading, then blame the private companies. But why are you blaming government for all those things? Be accurate.
There are political leaders who say no.
Name them. Who are they? What are you talking about?
We don't know what the regulators are leaning on the different platforms, and they're clearly monitoring it. I think.
Well, if you don't know, then don't say you know. Like, I know it's convenient during these times when people are emotional to blame the authorities for all these things, but what are you talking about? Who's shutting down trading?
Small businesses had not been able to operate.
That's not what I asked. I didn't ask about small business operating. We've been reporting plenty on that, and different places have different rules. But you said the same people have been both limiting businesses opening and shutting down trading, like we're seeing today. That just hasn't happened.
Okay, so who made the call to Robinhood?
Was there a call made to Robinhood?
I don't know. Do you think Robinhood?
You don't know exactly. That's all I'm saying. Go ahead.
Robinhood woke up and made the decision themselves. Halt the tickers.
I don't know, but I'm not claiming to.
Okay, I didn't claim to either.
You did. You just said that the authorities are doing all of these things.
Go back to the tape. I did not say that. I said people are not allowed to trade. I don't know what the calls made, but I don't think it came from Robinhood.
Do you think that?
I think it's a fair question, and I think it's the question, given the fact that you're the journalist, you should be asking, not me.
Exactly, and I will ask, but I'm not claiming to know like you just did.
I'm not claiming to know. I'm claiming to ask, and I'm asking you, did you call
Robinhood?
Robinhood?
Let's ask the question. Let's go ahead and do that. That's great.
You asked Robinhood the question today.
I don't have Robinhood on. I have you on. So I'm actually analyzing what you're saying.
Okay, so you haven't done your job today and emailed Robinhood and asked them why they stopped.
If I haven't done my job, then you're implying I'm wasting my time talking to you. But all I'm doing is, if you're putting a statement out there, I want to know what its basis is in fact. If there is no.
So I can answer this right now. And see, this is the problem with the financial media, right? This is so problematic, and it's so disingenuous. Number one, the Winklevoss twin, he misspoke. What he was trying to say is that people of the elite class, both politicians and businessmen and women, they are basically governing our lives where there's a set of rules for the elite, and then there's another set of rules for people like myself and people like you, is what he was trying to say. And whether it's income inequality, whether it's small businesses being shut down, whether it's the PPP loan, or whether it's the EIDL grant, or whether it's the stimulus money that's not getting to the American people, or whether it's the student loan problem, right? Or whether it's the bailouts from 2008, people are getting frustrated because everywhere they turn and they look, there's a one set of rules for the people up here, and then there's another set of rules for people like myself. That's why people are frustrated, and that's why people are angry. And this reporter, he understands the context to what the Winklevoss twin was trying to say and allude to. But see, he wants to be an asshole and a bootlick because, see, he gets paid from the establishment. He's a part of the establishment. The media is a part of the establishment. They are a barrier to what's going on. And they hate the fact that you and I, we have technology at our fingertips where we can beat the big boys, where we can sniff out their trades, where we can see what they're long and what they're short. Instead of asking a question like the Winklevoss twin said, did you contact the CEO from Robinhood? Did you contact the CEO from Webull? And did you ask them under what pretense did you make these decisions? That's the important question. How did you arrive at the conclusion this morning that it would be smart for you to restrict buying in these particular stocks? Why did you do so? And then ask the question, do you believe that there's a conflict of interest between you and Citadel that actually has ownership in the hedge fund Melvin Capital, or a partnership with Melvin Capital? We don't know the relationship. Is that a conflict of interest? These are the questions that journalists should be asking, but instead he wants to ask the tough questions to the Winklevoss twins. This is the problem. See, because now we have to go back here and we have to say to ourselves, look what ended up happening. Google salvaged Robinhood's one-star rating by deleting nearly 100,000 negative reviews. So people went and started basically voting based upon popular opinion and sharing their experience with Robinhood and giving them a 1 star because of the customer service, and Google wiped that all away. That's centralization failing. That's tech companies colluding with big business and government. This is the sentiment that people are mad about because they watch this happen time and time again. They literally just wiped all the 1 star, all of the 1 star reviews, the negative reviews, get rid of it. So they're censoring the true sentiment of what's going on. And then now you have the media. They're not reporting on. People are frustrated. They're mad. This is not about GameStop, the stock. People weren't buying the stock because they thought they were going to get rich. Most people thought that they were sticking it to the rich. That's the problem. Now we have to talk about, how does Robinhood make their money? And this is very key here, because a lot of you don't know this when you're using these apps and you think that you're getting free commissions, and you're really not, because you're paying a higher price for those shares. So let's read this article because I think this is really, really important here. Robinhood's customers are hedge funds like Citadel. Its users are the product. It says, as GameStop and other stocks targeted by day traders in the WallStreetBets subreddit begin to climb, popular fee-free trading platform Robinhood is outright preventing users from buying and only allowing sales to close out positions. The company has been widely criticized for the trading restrictions and is now subject of a class action lawsuit. Given that Robinhood is playing a central role in retail investors pumping dark horse stocks, it's worth examining once again how it makes money, namely by selling users' trades to other large firms before they are actually executed. Those firms make money by effectively seeing what the retail investors on Robinhood are going to do before they actually do it and acting accordingly. Those firms are basically buying information that then informs them of their own trades. For the past few years, Robinhood has spent a great deal of energy marketing itself as born out of Occupy Wall Street movement and champions a mission to democratize finance for all. The reality, however, is that this rhetoric distracts from the fact that it's actually helping preserve the status quo, namely by turning its customers, but more so their orders, into products. The secret to Robinhood's success and profitability is simple: payment for order flow. To ensure trades are commission-free, traders are sold to market makers or large firms such as Citadel Securities, Robinhood's largest customer, which tried to bail out Melvin Capital after its GameStop shorts cost it billions. Market makers execute those trades, sometimes at an inferior rate, and can use their privileged position to place themselves in the middle and make a profit. Crucially, in this arrangement, more trades and more volatility mean there's more for firms like Citadel to work with. Here is the Financial Times explaining how it works. Think about this. So when you're using Robinhood, effectively, you're getting effed. You're getting effed by people like Citadel Securities, who didn't, oh, by the way, they stepped in and helped bail out their buddies with Melvin Capital. And the same with Webull and many of these other brokerages and exchanges. Right? And you have to understand that the game is rigged against you. It's rigged against you. 100%. And finally, you were able to stick it to them and beat them at their own game, and they changed the rules mid-game. Mid-game. Now look at this. Rodrigo Seraphim says any CFD broker works on spread, nothing new. No one's not saying it's anything new. The problem is that that's corrupt. That's the problem. That's the problem, is that it's corrupt. That's the problem. And then now, even with that advantage, after you started sticking it to them, they basically said, you know what, we're just going to restrict your buying. It's problematic. So how long are you going to keep playing this game? That's the problem, Rodrigo. Why keep playing this game? Why keep playing it? Because they're making it very clear that they're not going to allow you to win. This is where decentralization comes into play. And I keep saying it to you time and time again. Now, I'm not sitting up here saying to you that crypto can't be manipulated. And I'm not sitting up here telling you that crypto doesn't have its own set of problems. The question is, what are the trade-offs? And how much can they manipulate that game? See, there are so many questions that need to be addressed. How can you even be short 140% of the float? Isn't a naked shorting illegal? Right? These are all things that we need to be discussing and asking ourselves. Right? We need a reset to this system. This system is not working. It's broken. And the future is either going to be decentralized or centralized. And I keep talking about that time and time again. And this is why Ethereum and DeFi is so important, because you do not have decentralized exchanges with Bitcoin. You don't. Bitcoin is digital gold. That's it. All it can do is sit there and store value. But with Ethereum, you can actually build applications on top of it, such as decentralized exchanges, that they have the same utility and they have the same properties that Bitcoin has. Permissionless, borderless, censorship resistant, open. That's important because, see, when you look at Uniswap, and I keep covering this right here. This is the block explorer for those of you that do not know. Like, if I click on this smart contract, I can come here and I can see the rules to the game. I can read the code, right? With crypto, code is law. We don't have to worry about Robinhood and Webull and clearing firms and institutional investors getting together and colluding and changing the rules mid-game. No, once that smart contract's out there, it's out there. And you can audit and read what this smart contract is supposed to do. You can see the source code. It's open source, permissionless, trustless. That's very important. I don't have to guess. So for those of you who always ask the question, why is crypto so important? This is why. This is why crypto is important. And you need to keep that in mind and understand what you're getting involved with. Because, as I said yesterday, regulations are not put in place to protect you. The regulations are not put in place to protect you. The regulations are put in place to crush competition and allow them to do bait and switches like this at the end. It's meant to keep competition out or to control you. And now you have to start being a three-dimensional thinker and saying to yourself, wait, if they can lock me out of my account or restrict me from buying, then you don't think that they can't restrict you from your bank account, restrict you from your funds? We just watched Twitter kick the president of the United States off the platform. Google can shadow ban you and you won't even know it. Facebook can shadow ban you. We just watched Discord remove the WallStreetBets server. Last year, when the Hong Kong protests were going on, when they were protesting for basic human rights, HSBC shut their bank accounts down. So this is bigger than just a stock or a few stocks that are being pumped. This is much bigger than that. See, the Web 2.0 needs to be upgraded. This is why we have Web 3 technologies. This is the whole idea of the Web 3.0. And so many people don't understand this because, see, when you look at what you view as the internet, because the internet's just an application with protocols, right? And then you have the physical layer. And then you have a whole bunch of protocols that talks to each other that allows you and I to be having this conversation right now. But you could not invest in those base layer protocols. So the tech companies at the end, at the tail end, at the end of the pipes, they were able to build Facebook, Amazon, Netflix, Google, etc. All of these tech companies. But they centralized control and authority and power. to the point where Facebook and Google controls 80% of the news flow on the internet. That's problematic because they control what you see and when you see it. And then companies can just say, oh, you engage in hate speech, and they can lock you out. You don't like an application? Apple can remove all your 1-star reviews. So how do you even know if what you're reading is true? And this is why so many people are getting frustrated with this system. It's bigger than just a stock. It's bigger than a stock. And it's bigger than Robinhood falling. Great, Robinhood falls. It doesn't change the fact of centralization. It doesn't fix the core problem. The problem is power corrupts and absolute power corrupts absolutely. That's the problem. We have corrupt politicians. We have corrupt CEOs. We have corrupt executives. That's the biggest problem here, and that's what needs to be addressed. Because now, let's listen to the Robinhood CEO. Let's listen to the Robinhood CEO speak, because I think that this is important, right? Where is he at? Right here.
Did you know Geico could save you hundreds on car insurance?
Because listen to the line of questioning. They did not question or grill him as hard as they grilled the Winklevoss twins. I want you to listen to this.
Bring in the CEO of Robinhood. Vlad Atenev is with us right now, and we appreciate you joining us on a day where there are so many questions. And as Melissa just said, there are, frankly, as you know, a lot of angry customers out there and a lot of questions about what took place and the decisions that you made to limit so many of your customers' ability to buy stocks like GameStop. Questions about whether you have a liquidity problem, whether you're trying to protect them from themselves, whether Citadel did this. Explain what happened today.
Thank you for having me on the show again, Andrew. So what happened today was, as you pointed out, we had to make a very difficult decision. It's been a challenging day. We made the decision in the morning to limit the buying of about 13 securities on our platform. So to be clear, customers could still sell those securities if they had positions in them, and they could also trade in the thousands of other securities on our platform. So it was a difficult decision, and that's what we had to do as part of normal operations.
But explain then, why did you do this? What, did the SEC call you and tell you you had to do this? Was there a problem inside the company in terms of liquidity, in terms of the amount of deposits that you had to put it in front to the exchanges? What led to this?
Notice the line of questioning. He's not grilling him the same way John Fort grilled the Winklevoss twins.
Sure, and let me explain exactly how this works. First of all, I want to address some of the misinformation that's been out there, because there's a lot of it. We absolutely did not do this at the direction of any market maker or hedge fund or anyone we route to or other market participants. The reason we did it was because Robinhood is a brokerage firm. We have lots of financial requirements, including SEC net capital requirements and clearinghouse deposits. So that's money that we have to deposit at various clearinghouses. So some of these requirements fluctuate quite a bit based on volatility in the markets, and they can be substantial in the current environment where there's a lot of volatility and a lot of concentrated activity in these names that have been going viral on social media. So we're really in unprecedented times, and in order to protect the firm and protect our customers, we had to limit buying in these stocks. And to be absolutely clear, Go ahead.
But it sounds to me, though, that you're suggesting that there was a liquidity problem inside the firm. And my question about that then raises all sorts of new questions about whether there's a systemic issue underneath the system and underneath the company unto itself.
No, there was no liquidity problem. And to be clear, this was done preemptively. So we did this proactively, and thousands of other securities remain tradable on the platform. Customers that held these positions were able to sell them. And we're doing what we can to allow buying and to remove these restrictions in the morning. But also, you might have seen Robinhood has been the #1 app in the App Store overall. So we have seen unprecedented interest due to the fact that finance has been culturally relevant in a way that hasn't been before, and these stocks are going viral on social media. And I think it's really interesting to juxtapose against some of the other questions that we've been having before this. Of course, Robinhood stands for everyday investors. From the very beginning, we have stood for investors, opening up access and giving them the ability to trade commission-free in whatever they want. And we've gotten a lot of criticism that, maybe there should be more restrictions.
So effectively, they did have a liquidity problem. And what was happening was that their partners, the people who they sell your order flow to, they were getting in trouble as well, just like the shorts were getting in trouble. And I think it's important. Again, I'm going to share this article with you for you to go and read this article about how does Robinhood actually make money and how do they offer you these low commissions. Waypa73 says, thank you for the donation. It is the exchange that puts halts on individual stocks. Broker dealers are not the judge and jury. If there was issues with New York Stock Exchange or NASDAQ, not Robinhood, Webull. Those are, again, these are questions that journalists should be asking. And that goes back to what the Winklevoss twins were saying, is that are you asking these questions when the CEO comes on your platform, on your show? Are you grilling him and asking him the tough questions? Is that a conflict of interest to be doing business and giving order flow to Citadel, and then Citadel is trying to bail out Melvin Capital that's in trouble because they're getting a short squeeze executed against them? These are the questions that journalists should be asking, not YouTubers. So thank you for the donation. That's great what you just said. This is what journalism is supposed to be about, right? You're supposed to ask the difficult questions. Because when we come here and we look at this and we see from this Bloomberg article, Robinhood is said to draw on bank credit lines amid tumult. It says Robinhood Markets, the trading app that's popular with investors behind this month's wildest stock swings, has drawn down some of its credit lines with banks, according to people with knowledge of the matter. The firm has tapped at least several $100 million. One of the people said the company's lenders include JP Morgan Chase and Company and Goldman Sachs Group Inc., according to data compiled by Bloomberg. Representatives for Robinhood and those banks declined to comment. And see, that in itself is a problem too. Because, see, you have to think a little bit deeper, right? There's a show called Billions. I want you to think about this. You don't think that someone from JP Morgan or Goldman Sachs, they didn't pick up the phone and go and contact other institutional investors and let them know that Robinhood's about to halt buying and restrict buying? So there's a conflict of interest there too, because these banks are doing business with hedge funds and institutional investors, and they're also doing business with Robinhood. So they're getting privilege to information. They're privy to information that you and I are not privy to. This is disgusting to even think about this. They're selling your order flow, and then they're basically in bed with the same banks. This is centralization. Because as I said to you before, this is the Cantillon effect. It's not just about money and sitting close to the money printer. These people sit the closest to the information. So therefore, they literally get the information before you do. And then now you have to factor in high frequency trading, how they can literally get your order flow. This is what happens with Robinhood. You put in a trade, And they didn't give that. They sell that trade to a market maker. And then the market maker with him and his people, they can take bots, HFTs, and jump the queue and buy ahead of you and then sell it back to you at a higher price. So they get to buy it at a lower price and then sell it to you and make the spread. So this is why market makers can't lose in this type of business. But when the volatility starts getting crazy, some market makers can get caught on the other side of the trade. And that's why they want to make sure that they bail their boys out. Thank you for the donation, Mr. G. I have Ally brokerage account, and at precisely 9:30 a.m. I was locked out of my account. This happened the last 2 days. Absolutely. And you know what they'll say? Oh, it's just a technical glitch. It's a glitch. It's a bug in the system. It's too much volatility. Centralization failing you, man. 100%. This is the need for crypto. This is the need for Ethereum. 100%. It says, the behind-the-scenes rush to bolster Robinhood's finances adds to signs that recent market havoc is putting a strain on the company, which has signed up throngs of retail investors for its app during a pandemic. Now, follow me here. They had to tap a credit line because they were in trouble financially. Robinhood was in trouble. But the CEO just said on the interview that they didn't have a liquidity problem, that they don't have a financing problem. But they had to go tap into a credit line. These people are liars. They're 100% liars and manipulators. And if you can't see it at this point, I just don't know what to tell you. Literally, they changed the rules to the game right in front of you. The firm is among brokerages that clamped down on trading in shares of GameStop Corp and AMC Entertainment Holdings Inc. on Thursday, setting off outrage among customers. Robinhood also told users it may close out some of their positions as it takes steps to reduce the count risk. So some people didn't even want to sell, but Robinhood just said, nope, we have to sell. That's insane. That's market manipulation 100%. 100%. As a brokerage firm, we have many financial requirements, including SEC net capital obligations and clearinghouse deposits. Robinhood said in a blog post Thursday, some of these requirements fluctuate based on volatility in the market and could be substantial in the current environment. These requirements exist to protect investors in the market, and we take our responsibility to comply with them seriously, including through the measures we have taken today. You weren't trying to protect the investors. You were trying to protect your company and your business partners is what you wanted to do. That's what you wanted to do. 100%. That's what's been going on here. And it's disgusting to watch it, you know, and I've been following this thread right here. And I think that this is interesting. Again, this is speculation here. So I need to say it to protect myself. And let me just get to this donation real quick. Money cooking recipes. WallStreetBets is pumping Dogecoin. Look it up on CoinCodex. I don't really care for Dogecoin. Thank you for the. I'll look it up in a little while. Money cooking recipes once I finish this presentation. But I don't love Dogecoin, nor do I hate it. I just don't think that it has any utility and solves anything. If you're truly trying to get into decentralized finance, right, which stands for DeFi, that's where the opportunity is at, right? You should be looking at smart contract platforms, Polkadot, Ethereum, Avalanche, Tezos, Cardano is what you should be focusing on. If you really want trying to make some serious money, if you're just trying to speculate and trade and you want to know what's pumping next, then you can do Dogecoin. Elon Musk, he's been tweeting about it a lot. And while we're towards the end of the show, I'll make sure that I get into some of these cryptos for you guys. So let's read this thread. It says, just got a tip that Citadel reloaded their shorts before they told Robinhood to stop trading GME. If this is true, Ken Griffin and the Robinhood founders should be in jail. This is class warfare. Now follow me here because I said this to you earlier. If you look at the short interest in the stock, the short interest is higher or about the same than it was a few days ago. So they didn't cover their shorts like they allegedly told you. They didn't cover because the short float is still, the float is about 123%. Right? So they're still short a massive amount of the stock. the short interest. So follow me here. What I believe happened, and again, this is my speculation and his speculation as well, is this morning they knew that they were going to restrict you from buying, and they repositioned their shorts at above $400, and then they forced it where only thing you could do is sell at a lower price, because now you're selling, your panic selling would drive the price down, and they were able to make back their losses today and then flip their book and go long, because that's what hedge funds do. They go both long and short, right? So they can go short, push the market down, and then go long, because now, as I said to you before, and after our market hours, the stock's up over 60%. And for those of you finance influencers who are so smart, who thought it was a good idea to buy puts, you're probably going to get your face ripped off tomorrow morning when this thing rips up back to $500. And for those of you who follow these finance influencers who are telling you, see, I told you it was going to go down, if this stock rips tomorrow, call them out on their BS. Please make sure that you do that. So it says, Rashida Tlaib, AOC, there should be a congressional hearing. SEC should investigate the following. Did Citadel's hedge fund, Citadel Global Equities, Citadel Wellington, hold any short position in stocks heavily owned by Robinhood users? And did they increase them in the past few days? Subpoena all emails and phone calls between Citadel Securities and Robinhood. Subpoena all emails and phone calls between the Wall Street banks and Robinhood. Robinhood gives its shares to Wall Street banks to lend out to hedge fund clients and short through prime brokerage. And this is what I said to you before. If they had to go tap a line of credit from Goldman Sachs, then that means that the banks knew that they were in trouble. And did they reach out to other institutional investors to let them know what was about to happen with Robinhood? And I saw your donation. I'll cover Robinhood later on. Dogecoin later. Did the Wall Street banks communicate with Robinhood to stop trading GME? Otherwise, they cut them off from their short borrow revenues. And let's go down here. This is very key here. From a Robinhood employee posted to Reddit. And I don't know if this is true or not, but I need to read this. An individual posted this inside of the WallStreetBets Reddit forum. I work for Robinhood. Don't kill me. Low-level technical computer science major, not finance side. Guess what we overheard today? Vladimir, yes, founder Vladimir, in the C-suite received calls from Sequoia Capital in the White House that pressured them into closing trading on GME, etc. I guarantee you the same took place at E-Trade and others who closed trading. Let me read that for you again, because this is very, very key. Vladimir, yes, founder Vladimir in the C-suite received calls from Sequoia Capital and the White House that pressured into closing trading in GME, etc. I guarantee you the same took place at E-Trade and the others who closed trading. File reports on the SEC page. If I wasn't scared to be out of work in a pandemic, I'll quit. I'm disgusted. We all need to rise up. This is as bad as it gets when we talk about how the rich get one set of rules and the rest of us get screwed over and over and over again. Left to bail them out and pick up the tab for their $1 trillion tax breaks. We need to pile pressure on every government and financial institution involved in this travesty. I'm taking a massive career risk even posting this here, but F these mother effers. Again, I do not know if this is true, if this is a troll, but it aligns with what's going on. If you listen to what the CEO is saying and the founder of Robinhood, if you look at the articles, Robinhood was having liquidity problems. And like the Winklevoss twins said to the guy, John Fort, how do we know that they didn't get pressured to do what they did this morning by restricting you being able to buy? That's key here. That's very, very key here because, again, who funds politicians' campaigns? Wall Street. Like the Rothschilds. Nathan Rothschild and the rest of them, they're just fund both sides. So no matter who wins, they win at the end because they control the purse strings. John D. Rockefeller said it. Competition is a sin. And we have to keep these things in mind. This game is rigged 100%. And when we try to rig the game in our favor, they penalize us. Now, there is a class action lawsuit. Where this will go, I don't know. Because again, you're playing in their wheelhouse, right? This was filed in the Southern District of New York. It says the nature is basically right here. Let's go to the article. I want to read this. So it says that 2 Robinhood users filed separate lawsuits against the brokerage app Thursday after it and other apps restricted trading on certain securities. The first lawsuit filed in the Southern District Court of New York alleges that Robinhood purposely, willingly, and knowingly restricted certain securities transactions, including GameStop. The other filed in the Northern District Court of Illinois alleges that the app manipulated its platform. Now think about this. A lot of people they posted and they said that they couldn't even close some of their positions, or their positions were automatically closed against them without their permission. Robinhood's mission is to democratize finance for all. They have failed. Alexander, an attorney for the Derek Smith Law Group representing plaintiff Brendan Nelson in New York, said in a statement. Keep this in mind. And I highlighted this down here. Let me see if I can find it. Right? This is very, very key here. It says limiting his ability to buy a security on the open market for absolutely no legitimate reason is unprecedented, particularly in light of the fact that Robinhood's competitors continue to allow for purchasing of GME and other securities. That in itself is very problematic, right? So you have to think about this. It also says the second lawsuit states that the plaintiff, Robinhood user Richard Gatz, owned 2 options contracts with BlackBerry at the time of the trading halt. The value of these options decreased by almost 200%, and the BlackBerry stock price fell over $10 from the prior day's close, the complaint states. It continues, if the stocks are not allowed to be trading, it is likely that the plaintiff will take a financial loss solely due to the defendant's behavior and manipulation of their trading platform. The defendant has, on information and belief, continued to allow investment in these securities by institutional investors who have benefited from the stoppage of retail investment. And that's very key here. The institutional investor, they're able to benefit because you can no longer squeeze them. And that, my friends, is a problem. That's manipulation 100%. There's no getting around it. That 100% is manipulation. And I just think that at a certain point, we just have to call it what it is, man. We have to call it what it is. So I want to play this last interview with Pomp, and then I'll get into some of your questions, and we'll cover some crypto and some stocks. Give me 1 second.
GameStop, they are rallying in the after hours on news that Robinhood will allow limited buys at tomorrow's open on that stock and others. This comes after Robinhood and other retail brokerages restricted trading on these high-flying names during today's regular session. Our next guest is calling those new restrictions on trading un-American. Joining us now is Morgan Creek Digital Assets founder Anthony Pompliano. Anthony, great to have you with us tonight.
Absolutely. Thanks so much for having me.
What's so un-American about this?
Yeah, look, obviously that this has been building for a while, right? And I think that there's a bunch of investors who believe that they've been punished as savers through the devaluation of the dollar. They've gone to the stock market, and today they are equipped with information, communication tools, and access to markets. And the friction to those 3 things has been driven nearly to zero. And all of a sudden, they start to find exploitations in the market. They find mistakes that large hedge funds have made. And the second that they start to exploit those weaknesses or those mistakes, the markets get shut, or the stocks, they can't trade them anymore. And so what we're seeing is people who are saying, wait a second, if you're going to risk capital and you're wrong, you should lose. Because if I risk capital and I lose, and I'm wrong, then I'll lose. And so all we're watching is we're just watching the acceleration where these people are going to pick up the ball and they're going to go play elsewhere. And they're going to move to the digital decentralized financial system that is a free market that operates as a meritocracy where the best idea wins.
Right.
If you're right, you profit. If you're wrong, you lose. There's no bailouts. There's no circuit breakers. There's no hours of operations. There's no one to call to halt the trading of a stock. If you're right, you profit, and if you're wrong, you lose. But that's no longer happening in American financial markets. We now have manipulated markets where the free market does not reign, and therefore we're going to accelerate the digital decentralized financial system that's being built now.
There is an undercurrent in this chat board. I'm not sure if you have gone on WallStreetBets yourself, Anthony, but there are certainly a number of people who are on this forum who say they were burned by the financial crisis. And we have one open letter to CNBC, and there are numerous letters to CNBC saying it's not just WallStreetBets, but every person affected by the '08 crash that's now paying attention to GameStop are going to remember how you stuck up for firms that ruined so many of us and tried to tear down the little guys. And of course, remember also back to the crisis, it was the big Wall Street firms that got bailed out and not so much the small investors. There is that undercurrent there. And I think not surprisingly, Anthony, the Bitcoin community has really sort of rallied along with the WallStreetBets community. Why do you think there is that undercurrent there?
Yeah, look, technology is the great equalizer. And so for the last decade, basically the people in '08, '09, whether it was Occupy Wall Street and Zuccotti Park, or just Americans, frankly, around the country, they felt helpless. They felt like they couldn't do anything. But now with technology, that great equalizer, we've seen a reduction in the friction for information. You don't need a Bloomberg terminal to play in the public markets anymore. You can literally just have an internet connection. Communication tools. You don't have to go to the idea dinners. You can go on Reddit. You can go in a Telegram chat. You can go on Twitter. And then access to markets. I no longer need a traditional brokerage account. I can simply go on a Robinhood or some other,
So now we could get into some charts, talk about some stuff. I see a lot of you talking about silver. Guys, I own silver, physical silver, real silver. I hold my silver. I don't depend on any third party. This right here, I believe this is 20 1 ounce American Eagle silver coins, or this could be my gold coins. I can't really see through the case. I own gold coins. I have them wrapped up. I own my assets. I'm a firm believer in I don't trust anything on an exchange. I lost a sizable amount of Bitcoin on Mt. Gox. I don't trust any exchange. Period. I own my assets outright, because what can happen is they can write more paper claims on your silver or on your gold than they actually have physical gold to deliver to you or silver to deliver to you, right? Because at the end of the day, they can rehypothecate it. And this is one of the problems. This is why crypto is superior to gold and silver, because you will always have to depend on a third party to store it and hold it for you. This is why gold, it will always be an inferior form of money, because you're not going to walk around with a whole bunch of silver bars when you go to the store. You're just not going to do it. So this is why precious metals will always fail as money, especially in the digital world. And this is why crypto is so important. So let's go ahead and see what's going on with Doge. A lot of you keep talking about Dogecoin right now. You know me, I don't love Doge. I don't hate it. It's number 9. It's up 2,000% over the past year, and it's worth $8 billion. So we have to look at it this way, right? They were able to pump the market cap of, this would be a good way to look at Dogecoin, right? If they were able to pump GameStop to over a $30 billion valuation, I believe it was like 24. Let's pull it up right now and see what the actual market cap is. Market cap of GME. So 15, it was 24 yesterday. So they were able to push the market cap up to $24 billion, right? So looking at how they're pumping Doge, let's say maybe we can get to 12 billion. Nothing crazy. So figure probably has another penny running it, maybe, right? Because it's worth 6 cents, basically about to be 7. Look, it's 7 cents now. It's pumping. They could get it to like 12 billion. I could see that. I could see the market cap getting to 12 billion. Maybe another 20-30% pump. But you just gotta listen. With Dogecoin has no utility. It's a meme coin, right? So you have to understand that, like, Ethereum is trying to be the world's supercomputer, where you can actually build software and applications on top of it. Like, that's completely different. Same thing with Polkadot being interoperable. So I don't see the need for a Dogecoin. To me personally, this is just another pump, and it's probably going to fall on you eventually. If you're already in from lower prices, like I said, I could see it pump into 8 cents, 8.5. You could probably get another penny, penny and a half, maybe another 30% rally. I wouldn't play in it at this point. If you're in it, you should be moving your stops up. If you're in it and you're in the money, you should be taking profit. Smart investing and intelligent investing is that you cannot go broke by taking profit. What you should not be doing is you should not be chasing Dogecoin. You should not be chasing Dogecoin, because after this pump is over, Dogecoin has no utility. Outside of Elon Musk and it being a meme coin, it has no utility. Chainlink has utility. Ethereum has utility. Aave has utility. Look at Aave. Aave's pumping. Synthetics, Uniswap, a decentralized exchange. If you're looking to invest in crypto, you should be looking at projects that actually have utility. I understand the WallStreetBets crowd, they're going to pump stuff. But eventually, guess what's going to happen? After they dump Dogecoin and the real crypto bull market begins to start, they're going to put their money in quality. Ethereum, Polkadot, Chainlink, Cardano, Bitcoin, Uniswap, SushiSwap, Aave, Loopring, Ren, Synthetics, Cosmos, VeChain. Real projects that have real utility that people are actually using is what you need to be focusing on, right? If you're trying to build wealth. Now, if you're just sitting up here and you just want to play around in crypto and you just want to you just want to try to, speculate with Wall Street bets, that's okay. What I'm telling you right now is that this asset class is a $1 trillion asset class. It's a baby. The stock market's worth over $100 trillion in total, collectively. You're investing in the internet before the internet. This is what crypto is bigger than just currency. And this is what I try to get a lot of you to understand, that Ethereum is literally a protocol, the base layer protocol that you can stack and build applications on top of. And you're trying to capture a network effect. This is very, very important. Inside of my academy, I cover all of this stuff. I cover all of the prices that you should own it and etc. Here's the link to join the academy. We have a free 7-day trial. You are welcome to come join our Slack community where we cover this. Because again, if you've been following me on this channel, and again, I'm not here bragging, this is not financial advice, but ETH is up well over 675% over the past year, right? And understand, you shouldn't be focused on price. You should be focused on market cap. Because look at this. Bitcoin's up 274%. Everyone's like, oh my God, Bitcoin's doing great. Bitcoin, Bitcoin, Bitcoin. But Ethereum's outperforming Bitcoin in percentage terms. And the same thing with Doge if you want to go that route, right? Because the smaller market cap cryptocurrencies, it takes less money to move them. This is why I keep trying to tell you we're extremely early, because all of that money that's in Wall Street bets, it's going to come over to crypto. Because we are decentralized, we are permissionless, we are borderless, and we are trustless. They're going to come to crypto. So for those of you who've been following me for the past year, 2 years, we just sit back and let our bags pump. Look at Aave, up 555%. Look at, where's Cardano? Cardano's up 580. Look at Chainlink. I've been telling you about Chainlink since it was $2. Let's look at Graph token. Where's the Graph at? Look at GRT, 62%. 62 cents. If you're in the academy, I told you all of the prices, all of the kill zones. And again, not financial advice, but just put some respect on my name, please. So, Dogecoin, I could see maybe going up another penny, penny and a half. Right? But these altcoins will run. And I told you before, if you look at Cardano, Polkadot, Tezos, Ethereum, the smart contract platforms, Look at them like a BMW, a Range Rover, a Mercedes Benz, the luxury cars. We don't know which one you like. Why not just invest in the gas that powers them? See, I'm not going to sit up here and try to guess which cryptocurrency to buy. You need the Graph token to index on-chain data, and you need Chainlink to push data and provide data from the outside world into the blockchain, into on-chain, right? So I look at Chainlink as off-chain, where they organize and sequence data, off-chain data, and the Graph token indexes and sequences on-chain data. And we know that data is the most valuable commodity. So why invest in the car when I could just invest in the oil and gas that powers the car? And then when we start talking about the fourth industrial revolution and we start talking about the World Economic Forum, that Chainlink's on that list. So it's important who you listen to and who you're following will be very, very important going forward. Let's pull up some charts now. And we do have the lifetime membership for those of you that are interested. The lifetime membership's right here. So keep that in mind. Because I have to keep trying to tell you guys, we're early with crypto. We're extremely early with crypto. Like it's laughable how early we are. Like prime example, look at this candle. This was 3 weeks ago. Look at this candle in ETH. How it came right down. Boom. And look how they just immediately was able to buy it up. They bought it up immediately. That's demand. Prime example, another stock. This stock right here, right? American First Majestic Silver Corp, right? I've been telling you about this stock going back to probably like a year ago when I was telling you that I own precious metal mining stocks. Barrick Gold, Rand Gold, Wheaton, and I look at First Majestic pumping. You know, again, I tried to give you guys the information to go research yourself because I don't believe in pump and dumps. I'm not a pump and dump person. You're not going to find that over here. I'm not going to pump something because I like to invest in something that will be around 3 years from now, 5 years from now. That's me personally. That's how I like to invest. I don't like to invest in something that's going to pump 700% today and then tomorrow it crashes 50%. That to me just isn't smart investing. So you have to be smart about what you're buying here. Look at this. It pumped right to the all-time high, the previous high from July, and then it crashed, right? I don't think that's the all-time high. The all-time high is up here at 28. So it pumped all the way up here. Look at this. This is how you know that this is algorithmically driven. See, these are bots. And I want you to understand, even for those of you who are part of the WallStreetBets forum, trust me, a lot of those people who are pumping these stocks, those are institutional investors. Be careful with hopping in these stocks or these cryptocurrencies and you thinking that it's the community pumping them. Just like there's institutions shorting these stocks and they may be over leveraged, trust me that there's institutions on the other side buying these stocks and eventually they're going to dump because there's no way that this stock goes right up here to the T, literally right to the tick, to the penny, and then reverses. It goes all the way up to $19 and change and then reverses. Keep that in mind. That's algos. Those are algos trading right there. Keep that in mind. Do not be stupid and just blindly follow the things that you're seeing people post. Make some money, protect capital, take profits, move stops up, be prudent in what you're doing. Right? Now listen to what Cordero says, as long as we eat, who gives a F? Well, the problem is eventually many of you will not eat. Someone's going to get caught holding these bags. See, I don't have time to speculate on, trying to make a quick 700%. because I'm up 10x on my ETH position, more than 10x. I'm up, but 30x, 40x on my ETH position by just dollar cost averaging and buying and hold. I've been in Ethereum since $40. Been in Bitcoin since $800. Been in Polkadot since $3. Link since $7. Smart investing, right? I don't need to sit up here and try to play around and pump and dumps, because guess what? I want to be involved in something that will be here 3 years, 5 years later. Right? This pump stuff is going to get you in trouble. A lot of you are going to lose money. Now I get it. I understand GameStop. I understand the AMC sticking it to the man. I'm all for that. I agree with you. I support that. But then understand now the rules have changed. Your pumps don't work. There's no way Doge is getting to $1. There's absolutely no way that Dogecoin is going to get to $1. Just look at the market cap and and ask yourself, how much money would have to come into Dogecoin to get it to $1? There's absolutely no way Dogecoin's getting to $1. It's just math, guys. It's the same thing with Ripple. It's the same thing with the garbage Ripple. There's absolutely no way. There's no way that Dogecoin's getting to $1. It's mathematically impossible. It's not happening. Now I get it. You know, you have bots that are pumping Doge and you're seeing the price go up and you see the algos pumping it. You see Elon Musk tweeting about it. This pump is going to end in a week or two. I've been talking about buying Ethereum on this channel since it was at $100. If you've been buying Ethereum since it was $100, you made 10x on your money. And you're sitting deep in the money now. And you've been dollar cost averaging, meaning you've been buying a little bit over time. You're in from a lower price, and now you can sit back and let your bags pump. Because the WallStreetBets crowd, eventually, guess what? When they dump Doge, they're going to pump Chainlink, and Chainlink has real utility. And then guess who else is going to pump Chainlink? The institutional investor will pump Chainlink. You already have mayors of towns bullish on Chainlink. Buy smart stuff. Invest in smart things. Well, you guys didn't do a good job of holding today because GameStop dumped. So let's see what else is going on in here. So like I said before, I could see Dogecoin maybe giving you another. I could see Dogecoin getting to about 7.5 cents, maybe even 8. That's about it. I don't see Doge running up anymore. I see many of you missing out on it, honestly. What else is in the chat? Yeah, I sold all of my basic attention token. Nothing was going on there. Let's see what's going on with AMC. A lot of you are asking about AMC. So first let's check Wheaton. Wheaton's pulling back. This is another one of my favorite stocks. Another one of my precious metal stocks I like. What else am I looking for? AMC. Let's look at a daily, see what's going on. Oh my God, look at these. That pump was insane. I can't wait till tomorrow, guys. Tomorrow's going to be epic. I can't wait to see the open because we know it closed at 311 for GME. This is going to be interesting. This will be interesting tomorrow to see where this opens up at. I believe that they're going to squeeze the shorts. because I believe the institutions are long now, and I believe that they're going to squeeze most of you who decided to go short and buy puts. So hold me to that. What else is in here? Dogecoin's unstable. Yeah, I agree. AMC to the moon. I hope there's a lot of news footage though. AMC is back down to $8.63. Yeah, but I believe that once the economy and stuff opens back up, that stock will go back up. And I believe that what they're going to try to do is, because see, everything's moving digital, right? So you have to understand that a lot of these brick and mortar businesses, if you've been following my channel, I've been covering all of this about the world going digital, about how the economy is not going to recover. This is our 9/11. And I think that you have to understand that the world has fundamentally changed, right? Very, very, very important that you understand that. AMC is going to basically restructure probably their debt obligations. They're probably going to then go out here and create some type of a streaming platform or some type of a business model where rather than you going to the movie theaters to watch movies, they're probably going to be able to sell you movies directly in your home. So I believe that they're going to probably transition to some business model similar to that, where they'll actually be able to deliver movies straight to you at home. And I think that would be much, much better. I wouldn't say much better, but I believe that that's going to be a business model that allows them to stay afloat is what you should be focused on. I believe that's what's going to happen, like a subscription model where you can watch movies right from your TV and you'll pay like $20 or $30 a month. So the idea that like AMC is just going to completely disappear, I don't believe that's going to happen. They're just probably going to restructure their business model. So I can see them being around years from now. And I could be wrong about this, but that's what I believe. Thank you for the donation, Bert. I don't really know too much about the Keep network. I believe that that's affiliated with the guy Andre from Wi-Fi. I've said this time and time again. I believe that Andre is very, very brilliant. I think he's extremely smart, but I believe that a lot of these things are going to fizzle out. I believe that these are just gimmicks right now, and he's capitalizing off of market inefficiencies. As this space matures more, the DeFi space, and as more developers and intelligent people, they're able to create better ecosystems, it's going to remove a lot of this arbitrage. And the more complexity that you add into crypto, the more likely something is going to break. And I believe that that's what's going to end up happening. So I don't have a position in Keep. I don't really know too much about it, but I just know that the guy Andre seems to be like a guy who just is involved in a lot of stuff. And I don't like that. I like individuals who have focus. Anytime you see a person like constantly just jumping into this project, that project, this project, I don't like that. I like consistency. And that's why I knew EOS wouldn't work out, because there's no consistency there. Right. So whenever you see a person jumping from project to project, you have to be very, very, wary of that. So I like Digibyte though. I don't own any Digibyte, but I like Digibyte. I think Digibyte's a solid project, and especially as far as like transactions per second. Because Bitcoin will never be a currency. It can't be. It's too slow. It's too inefficient. So Bitcoin can only be a store of value. That's it, and there's nothing wrong with that. But as far as payments is concerned, something else is going to take that over. Thank you for the donation, Alexis Rios. Well, it's very simple why you like this Ripple. No one is using Ripple because they want to use it. Ripple is actually paying people to use the token. And then they're going out and they're promoting it as if all of these banks want to use the project. And then the money transmitters that they were working with, actually in some cases, it cost them more money to use Ripple's ODL product. So the whole, first remember, Ripple was promoted as being a banker's cryptocurrency and being able to help with Swift payments and making, international payments much quicker and cheaper and efficient, and fixing the Swift system. Well, that never happened. Then they rebranded themselves to being a money transmitter. you have stable coins. You don't need Ripple, right? Because you have Ripple Labs, the company, and then you have XRP, the token. So when people keep telling me, well, you have XRP, the ledger, you have the ledger. Well, who's using the ledger? Outside of Ripple Labs creating products and services around the Ripple ledger, who else is actually building on the Ripple ledger? So this idea that the Ripple ledger will, exist and the Ripple cryptocurrency will exist without Ripple Labs is bullshit, right? Because no one's using it. They're getting paid to use it. See, I want to invest in something that people actually want to use. Right? So this is important when you understand that. So when you look at Ripple, for years, everyone in the crypto community has been looking at it and saying to themselves and saying about the project that it's a security. It behaves just like a security. And then now you have the CEO, think about this, it's in the SEC complaint. These are the allegations. You have Brad Garlinghouse paying market makers to pump the price, similar to what's happening right now in GameStop, pump the price, get you to buy, push the price higher, and then they sell and dump on you. Him and his wife, they've made over, $450 million selling the token. Why would the CEO, think about this. This is common sense. And again, I'm not attacking you, so don't take this as an attack. If I'm the CEO, and let's say that this is Ripple coin, and I believe that Ripple coin is going to be have a $1 trillion market cap, and I have all of these partnerships going on, why would I be selling the token? Why would I dump the token on you, the public, if the project is so great? He's in the public, Brad Garlinghouse. He's going on CNBC. He's telling them this Ripple's going to take over the world while he's dumping the token in the marketplace, right? So, it's important that you start thinking about this type of stuff, and you have an understanding as to, right? Like at a certain point, you can't just be a white paper and an idea. At a certain point, you have to actually start building things. When you look at Ethereum, DeFi makes sense. Aave makes sense. Okay, self-driving banks, decentralized insurance markets, and then people are using the actual ecosystem and building. You have developers building things. You have Reddit partnering with Ethereum now for scaling solutions, right? You have JP Morgan and all of these other institutions getting involved with Ethereum and stable coins, etc. You don't see anyone using Ripple. They're getting paid to use it. And once the partnership's over, they don't use it anymore. Thank you for the donation, Asun Kutlich. What do you think my company's token symbol turn ERC20 on core market cap? Let's pull it up. I never heard of that particular project. See if you can find it here. I would have to look it up. I don't know anything about this project. I'll look it up and potentially tell you what I think about it. Yeah, I'll have to look at it. I can't give you any opinion about it personally. I don't know how long the project's been around for. I mean, you can email me some information if you want about the project. See when the project just came out, January 1st. It's pumping. You got a good pump. This is December. So you got a good pump. Past 3 months. It's been pumping. I can't see. Where did it open at? Hold on. Let's look at it and see what the all-time high is. So the all-time high is $13 and let's see if I can pull it up on a chart because I can't really see it here. Let's go here to coin market cap because I can't really see it here. See if we can get a better chart. I'll see what's going on. Crypto. Let's go to coin market cap. All right, so we can do some better analysis with this. See what we're talking about. Turn right here. So is it the ERC20 version? Assume. Let's see what's going on here. I guess it's the ERC20 version. So let's be able to pull it up and see. All right. All time. Oh, so this thing is going down. I thought it was pumping. Trading volume is down 4%. I'll look into it for you. I thought it was pumping. It's going down. Actually, the price, it went from 14, it peaked out, and it's all the way down to $4.32. It's Tornillo. So the ERC20, I'm assuming. Yeah, this thing is dumping. It's not. I thought it was pumping. It's actually going down. It opened up here at 5. The actual price was at 5. Then it pumped all the way up here. 12. Now it's down here at 4. Yeah. Yeah, I mean, it looks like a pump and dump, but I'm not gonna disparage it. I'll look it up for you, see what it's about. I'll look it up for you. Do some better research on the project. I have a decent looking website. Issue cards. We empower companies to be their own bank. White label technologies, giving blockchain and cryptocurrencies real world banking application. All right. Tornillo. So it's called Tornillo, right? Tornillo supports multiple coins and is the only company enable users to hold crypto until the point of sale. Other cards take a user's crypto, converts to fiat, and places the USD value on the card, which is the equivalent of buying a gift card. Thank you, Alexis Rio. So I'll look into the project. Thank you for the donation. I'll take a look at it and see what it's about. To me, Litecoin is just, it's a dead project. I don't see Litecoin lasting in the top 10. I've said this before. DeFi is going to eat most of these projects, and eventually Ethereum will flip Bitcoin. Ethereum's going to flip Bitcoin. Excuse me. Within the next 3 years, 3 to 5 years, Ethereum will flip Bitcoin. Or whichever cryptocurrency wins the actual smart contract platform, they will flip Bitcoin because they have more utility and they're going to capture the network effect. Prime example. If I have a cell phone, the cell phone network is useless. But the more people that actually have cell phones, the more valuable the network becomes. And the more people we onboard into the DeFi ecosystem and into Ethereum or Cardano or Tezos, whoever wins at a Polkadot, that network is going to become more and more valuable. Bitcoin will be digital gold, and Bitcoin will be able to sit on top of one of these actual smart contract platforms as an asset, as collateral. But at the end of the day, Ethereum or Polkadot, in my opinion, will capture the Web 3.0. Because this goes back into what we're talking about right now with the Web 2.0, where the tech companies, they're failing us. They have too much control over the flow of information, too much control over our data. They have too much say as to who can and who can't use these platforms. And more people want a free-flowing ecosystem and an environment. So in my personal opinion, I just believe that Ethereum is so far ahead of all of these other platforms that I just believe that they're going to win it eventually. It's Ethereum's game to lose at this point. But Polkadot, you know me, I'm a big bull on Polkadot. So I'm a huge bull on Polkadot because Polkadot, in my opinion, it has all of the things that ETH 2.0 is trying to be able to do in the next 2.5 years. I believe that Polkadot will get there faster. I don't like Ravencoin or Feathercoin personally. I know that a lot of people used to play around in Ravencoin. I'm not a fan of either one of those projects. Again, VA 804. Here's some projects that I'm not invested in, but I've read a little bit about them and I have some good insight on them. Zilliqa is a nice project. I really like Zilliqa. Theta is a good project. I'm not involved in Theta, but that's a good project. Maker because Maker is an autonomous, decentralized bank, like a reserve bank sitting on top of there. That's a good project. But Revcoin or Ravencoin, nah, I don't see that lasting. Avalanche is a decent project. There's a Zilliqa. Zilliqa's a decent project. Hedera Hashgraph. I have a bag of Hedera Hashgraph. The Near Protocol's interesting. Loopring is really, really interesting. That's a project you should take a look at. Those are projects to me, like you have to think about investing in things that have utility. Like I keep saying, that people are going to use it outside of just speculating on the price, right? Like you can't just buy something because the number goes up, right? Will people want to use it? That's very, very key here. Like that's 100% key. So you have to keep that in mind. Like Uniswap. For those of you who have been following me, you know that you got the airdrop with Uniswap. Uniswap has utility. The fact that it's decentralized, that you can trade any token on a Uniswap decentralized exchange 24 hours a day, 7 days a week, 365 days out the year, right? It's not dependent upon an order book. It's dependent on an automated market maker. And then you can put liquidity into the system, provide liquidity, and you can earn money. So there's multiple ways of, just that ecosystem of earning money with the project, with the protocol and using the protocol. So. Yes, Chris J. Everyone will have access to the 100 Days of Coding. The 100 Days of Coding should be getting launched around the second week of February. I just released the DeFi course inside of the academy. The JavaScript bootcamp's already there. I'm redoing the JavaScript bootcamp because we're going to focus on web development, because many of you are having trouble with the HTML and the CSS, right? So we're going to go back and redo the course and really focus heavily on HTML, CSS, and then go to the JavaScript. One thing about me, I listen to my community, right? So if you guys are telling me that you're struggling with something and I'm not doing a good job of teaching it, then I'll go back and redo it all over again so that you guys can get the most of your money, the best bang for your buck, right? Because Solidity reads, like the Solidity, once you get into the programming language, it's very similar to JavaScript, very, very similar to JavaScript. So if you can learn JavaScript, then when we get into building our dApps, it would be easy for you to do so. And again, we have the lifetime membership if you don't want to have to be a monthly member. And you're free to come try it out for 7 days if you want to. I'm going to wrap this up, guys. We're going on an hour and 30 minutes. I like to keep these streams around this time period. For those of you who are speculating in Dogecoin, for those of you that are speculating in AMC or GameStop, you can never go broke taking profit. Understand that there's a lot of people behind these assets, and at this point, it's outside of WallStreetBets control. You have a lot of institutional money now flowing in, and they're going to be swinging these stocks around left and right. Be smart. Again, you can never go broke taking profit. But this started out as a rebellion and trying to stick it to the man. And as you can see, that the system is flawed. 100% it's flawed. And this is why we need decentralization. This is the biggest bull case for crypto. So please do me a favor and like this video, share this video, subscribe, hit the notification bell, set all notifications to all. Also, make sure that you join my mailing list so that you can be notified via email. Follow me on Instagram, shoot me a DM, and if you're interested in joining my crypto community, learning about the technology and partnering with me, we have My Tech Academy. A link is in the description below. I look forward to seeing you guys tomorrow. And please, guys, be responsible. There will be some wild swings in the market tomorrow. Have a blessed and beautiful night. I will see you tomorrow.